Hello everyone. In previous classes we have studied about Bombay Stock Exchange and the calculation of Sensex. In today's class we are going to speak about National Stock Exchange. National Stock Exchange headquarters are in the Mumbai and index is Nifty, full form National Stock Exchange 50. Consists of group of the 50 stocks, Bombay Stock Exchange top 30 stocks and National Stock Exchange top 50 stocks. Date of launch is April 1994. Base period is 1993 and 1994. Base index value is 1000 and members are 726. Okay, totally 726 members are there. Other than that, all the calculations are same as like the Sensex. The National Stock Exchange is associated with Nifty, so the index is Nifty. The calculation of Nifty is same as we calculated the Sensex, but with two key differences. There is only two differences between the calculation of Nifty and the Sensex. Base year is 1995 and the base value is 1000. Okay, Nifty calculation is based on 50 stocks. Everything else remaining the same in Nifty index calculation. So in BSE we are going to calculate the index of 30 stocks. In NSE we are going to calculate the index of 50 stocks. How to calculate? Here is the example. Assume the base index is 1000. There is no need to assume the base index itself is 1000. This is fixed. Market capital index consists of 5 stocks. Okay. So in fact there is 50 stocks. To simplify the calculations, I have considered only 5 stocks here. So let's see what are those stocks are. Reliance is there, AB and U is there. It's a manufacturing company. Infosys is there, HLL, Tata Tea is there, and this is the current market capitalization. Okay, and it is base market capitalization. So market capitalization, total number of shares into the prices. Okay, in the base year it is the base price, in the current year that is the current price. So here is the total market capitalization for present and in the base year too. Then, as usual, the calculation with the same formula, current market capitalization divided by base market capitalization multiplied by base value. Okay, so the index is 73 lakh 30,566.1 divided by 73 lakh 11,383.4 into 1000. 1000 is the base value. Okay, so the index value is 1002.62. So the base value is 1000 and the index value is 1002.62. So this shows the bullish movement. We'll go for stockbrokers. A stockbroker is a person who is licensed to trade in the shares. Okay, he will get the license from the regulatory authority. Brokers also have a direct access to the share market and can act as your agent in the share transactions. So they have the direct access. Even a normal person can get the access, but he should have the demat account. So the brokers are a professional one. They are specialized. They have the good knowledge about the market, and that's why many of the investors will go for the brokers. For this service, they charge a fee, that is brokerage. Okay, their suggestions are valuable. They can also offer the additional services like advice on the shares, debentures, government bonds, and listed property trust and non-listed investment options. Trading in stock market. The market regulator, that is SEBI, has made it compulsory to open the demat account if you want to buy and sell the stocks. So if you want to buy and sell the stocks in any of the stock exchanges, you should have the dematerialized accounts. Let's see dematerialized account meaning bit later. A person want to buy or sell stocks in the stock market has to first place his or her order with a broker, or you can go for directly. Okay, through online trading portals you can uh, place your order, but even you can go for the brokers. The stocks purchased will be sent to the the stocks purchased will be sent to the demat account, and this process is called rolling settlement cycle. So the stocks which you have purchased that will not come to your hand, that will be credited to your demat account. So in the demat account you will not get any physical certificate of your stocks. You will get the shares in dematerialized format. let's see what is demat account. Demat stands for dematerialization. Okay. In older days, the stock certificates what are there, so that used to send through post. And nowadays, by using the technology, the regulator made mandatory to open the demat account, and the stocks which you have purchased will be credited to your demat account. And through demat account only, even you can sell the stocks. Okay. So instead of the physical paper, it is converted to dematerialized format. In India, there are two depository organizations. One is NSDL, National Securities Depository Limited, and CDSL, Central Depository Services India Limited. Okay. Brokers and most of the banks provides the facility to open the demat account. You go on for any of the banks, either maybe a private sector or maybe a public sector, they used to give you the option to open the demat account. Here is some of the important terms in the stock market. Opening price, the stock price in the beginning of the day. So I have shown this one in previous classes too. I have opened money control app, and there in the market I have opened Nifty. See, here is the opening price, and here is the previous day's close. Okay, so previous day's close and opening price is different. In accounting and all, previous year's closing price will be this year's opening price, but this is not the case of the stock market. Why? So that is the effect of after hours trading. So stock market will be closed at 3:30 p.m. and it will be opened at 9:30 a.m. Correct? So in between this period, something will happen. The company may give the dividend. There may be some other announcements, some of the price sensitive informations. If it is announced, then the prices will be definitely changed. Correct? Because of that effect, the previous day's close what is there, that would not be the next day's opening price. Okay, so this is always happens in the stock market. So let's go for the terms. Opening price, and the previous day's close, or else the closing price. Okay, closing price also, before that, high, this particular day's high. Okay, so high, day's low is there, day's high is there. Okay, one particular day's high it is here, right? Then day's low, what is the lowest price of today? So that is what mentioned here itself. Then after closing price, the closing price is also mentioned. Today the still transactions are going on, that's why today's closing price is not mentioned. Okay, here the closing price will be mentioned, and if you are open the money control app after 3:30, you will get another closing price, today's closing price. Bid is nothing but buying price, and offer is nothing but selling price. And the volume is how many number of stocks are sold in that particular period. So the volume is also mentioned in the stock market informations. We can get the volume informations here itself. Okay, see here 4.7 billion stocks, and the very bullish information, that is technical ratings. Even you can get the technical indicators here itself. Okay, see the technical indicators, that is the aspect of unit 3. So for that we will go after completion of this unit. So this is what the terms which is used in the stock market. That's it for today's class. In coming classes we are going to discuss about investment in short term, mid term and long term